I love the game Two Truths and a Lie. And of the following three statements about the stock market, can you tell which one is the lie? The stock market averages less than 10% per year over the last 30 years. Second statement, dividend stocks outperform growth stocks. In the third statement, the stock market is one of the three best ways to create wealth. So let's dive into those a little bit and answer the question, which one of those is a lie? And the answer may surprise you. So the first statement is that the stock market averages less than 10% per year. So it depends on a few factors, but in general, this is true. So some of the factors include, what's the stock market? Are you looking at the Dow Jones Industrial Average? Are you looking at the S&P 500? Or are you looking at some other index or some other measuring method? Second, what time period are you looking at? If you're looking at the most recent 30 years or 10 years or 20 years or 50 years, it's going to vary. And the longer you look at, the better average you get. And that's why I was looking at a 30-year period. Third, when they show returns, some places will include dividends, some will not. Some places will actually include the dividends and automatically reinvest those, some will not. Also, some places factor in the adjustment for inflation and others do not. So it depends on all those different factors as to what numbers you end up with. But putting all that together, if you're looking at the last 30 years, whether it's the S&P 500 or the Dow, even if you're not adjusting for inflation, the average return is still less than 10% per year. It's in the 9% range. The second statement is that the dividend stocks outperform growth stocks. Now, answering this question is a little bit trickier. So it depends on which stocks you're looking at. So if you're looking at the best growth stocks that are out there and some of your below average dividend stocks, sure, the growth stocks are definitely going to outperform the dividend stocks. However, if you look at all growth stocks, including those that failed to grow as planned, along with all the dividend stocks, then the picture is different. Here's what you'll find. Over long periods of time, the appreciation of growth stocks will usually outperform the appreciation of dividend stocks. However, when you factor in the dividend stocks usually outperform the growth stocks. So why is this? In strong markets, the growth stocks outperform the dividend stocks. They're taking off, they're growing, things are going great, and some of those returns can be phenomenal, 10, 20, 30, 50% a year. And dividends don't pay that much. They're usually in the 4 to 12% range. But even after factoring in the dividend, these growth stocks usually outperform in the strong markets. In moderate markets, the two are pretty even. It's in the down markets that the dividend stocks catch up. And there's three huge advantages that the dividend stocks have in a down market. First of all, their prices do not usually plummet the way that growth stocks do. Many of them are more stable companies with long histories of profitability. Second, the growth stocks do not have a dividend that offsets some of that price decline. And third, when stock prices are down, that's actually the best time to buy dividend stocks at a discount. And by reinvesting the dividends, you are automatically taking advantage of lower dollar cost averaging prices and buying more shares when the price is lower. Therefore, the statement, dividend stocks outperform growth stocks, is typically true. Does that make the third statement a lie? Let's find out. The statement was, the stock market is one of the three best ways to build wealth. Well, first of all, let's start by looking at how most wealth is created. If you look at any list of billionaires and multimillionaires, you're going to find a common theme. Nearly every one of them made their wealth by owning a business or by investing in real estate. Those are clearly the two best ways to create wealth. Is the stock market the third best? Well, that gets a little trickier. I could show you about 5 other ways to build wealth that are better than the stock market. Absolutely. That gets a little trickier. Could I show you 5 other ways to build wealth that are better than the stock market? Absolutely. But some of them are not really common ways to build wealth. One example could be Forex trading. If you learn to do that really well, you can create wealth a lot more efficiently than you would in the stock market. But that's not really that common of an option. So I'm not going to include those types. If you do want to learn more about some of those ways to create wealth and build passive cash flow, check out our Financial Freedom Fast Track program. There's a link in the description below. Anyway, if you look at the common ways to create wealth, 20 years ago, the stock market might have been the third best way after real estate and owning a business. However, cryptocurrency has surged onto the scene in the last 10 to 15 years and created more millionaires at a faster rate than the stock market. Although I'm not a huge fan of crypto, you cannot argue with the facts. It has created a lot of wealthy people. In an article in September of 2023, it showed that crypto had created created over 88,000 millionaires. It had also created over 182 centimillionaires, which are people with more than $100 million, and it's created 22 billionaires. So that's a lot of wealth created by the crypto market. Therefore, the last statement is the lie. The stock market is not one of the 3 best ways to create wealth. Again, if you're interested in learning how to create new wealth and how to generate passive cash flow, take a look at our Financial Freedom Fast Track program, where we provide the education, the exclusive investments, the community, and the one-on-one support to help you achieve financial freedom. A link with more information is in the description below. Thanks, and have a successful day.